This is absolutely wild, ladies and gentlemen. We got PPI that came out much better than expectations, retail sales that totally flopped, Fed Jerome Powell got COVID, and the markets are finally getting rejected at that trend line that we have been watching for a while now. We have a lot to go over in a very short amount of time. Guys, let's get into this video. Hit that like button and subscribe to the channel if you learn anything in this video. So that is first things first. Let's talk about retail sales and PPI. So PPI month over month that came out at 8:30 in the morning today. We were expecting negative 0.1% month over month. It came out at negative 0.5% month over month. So massively beat expectations. And then retail sales completely flopped. We were expecting a negative 0.4% reading. It came out at negative 1.1% month over month. This was not good. On one hand, it shows that people are not spending as much, whatever, that's cool for the inflation front, but on the other hand, it does go to show that the economy is slowing much faster than people are expecting. So that is not good. And then Fed Jerome Powell got COVID in the midst of all of it. So I think a big question of the markets is, will the next Fed meeting actually be delayed because of it? We'll see. But as of right now, there's about 2 weeks until the next Fed meeting, so that doesn't look to be the base case. Now, we also got Fed Bullard that spoke at 9:30 in the morning, and he said that a 50 basis point rate hike is appropriate at the next Fed meeting. Now, he is not a voting member, but it did help to send the markets down. And that's key to know, because the markets, Fed Bullard's not as important to the markets now than he was in 2022, but it's showing that he is still going to move the markets depending on what he says. Now, holiday sales fell short of expectations, set stage for tougher 2023 for retailers. Holiday sales came in below industry expectations as shoppers felt pinched by inflation and rising interest rates. Sales during November and December grew 5.3% year over year to $936.3 billion, below the NRF's prediction. The gains include the impact of inflation too, which drive up total sales. So really, if you take out inflationary prices increases, retail sales would have looked much worse. So this is, on one hand, not a good thing, like I said, for the markets, because people are not spending as much money. But on the other hand, it is a good sign for inflationary pressures. Now, as far as what we have for tomorrow, we are going to get more economic data. Let's go ahead and pull it up. We get building permits, preliminary numbers for December, and housing starts, as well as initial jobless claims. That's probably going to be the big catalyst tomorrow, and we're expecting 207,000 initial jobless claims. If this number comes in higher than that, that's probably going to be a good thing, unless it comes in super high above that, right? Like 1 million or like 500,000. If it comes in under that, probably going to be a problem for markets. Now, let's get into some things that are more specific with AMC. Now, the markets are down quite a bit today, so it's been hard for AMC to kind of catch a rally. Now, we're still above this key line right here, so not all is lost. The stock is down 6.34% here on the day, and I do think the rally will continue, especially once you get more bullish momentum in the markets, which could come tomorrow. Now, this is the first day of 2023 where the S&P 500 is down more than 1%, and you are down 1.10% currently on the day. You also did get rejected at $400 again, and that is a big problem for markets, because it looks like you're getting rejected at this trend line, and the trend line is that the bear market is still fully intact. And once you get rejected from this level, last time you fell to about 375. So if you fall to 375 again, that's kind of a good outcome to all of this. You could fall a lot more, considering we're going to have a lot of earnings coming over the next couple of weeks, like your large tech stocks, that will shake the markets up dramatically. And speaking of earnings, you're going to have Netflix earnings tomorrow in after hours. Today, after the markets close, you're going to get Discover. That's going to be the big one that could move the markets, depending on how credit quality is, right? How people are opting to spend money on their credit cards. Are they paying back their credit cards? Those are important things for investors to know for the overall credit rating of consumers. So that will be very important coming out in after hours. Netflix will be super important coming out tomorrow, and depending how those things play out, it will definitely cause a big move in the markets. If we take a look at the Ortex data for AMC, you're sitting at 21.97% short interest of free float, 113.17 million shares that are currently sold short. Cost of borrow rates as far as Interactive Brokers sitting at 106.22%. Cost of borrow average of 245.88%. Cost of borrow max of 358.82%, and cost of borrow minimum of 21%. So the numbers here have not changed around all too much. Cost of borrow rates do tend to fluctuate, but overall, very bullish. If we take a look at the option activity, 102 orders totaling $22.76 million. Positive order value of 6%. Still not a positive order value. Not even close to 50%. It's been so negative over the last couple of weeks. We're pretty much used to seeing that at this point. Now, if we look at the Stonko Tracker data and go ahead and refresh this, make sure we're getting the most up-to-date numbers. 41,000 calls that are in the money, 475,000 calls that are out of the money, puts that are in the money 139,000, puts that are out of the money 176,000. Now, if tomorrow is not a big green day, then it's possible we get a very strong close on Friday. That is what we have seen in the past with some of these large option expirations. I've coined the term mega bounce, right, on those Thursdays or Fridays where you have a lot of options that are on the option chain and you don't have a lot of time left to expiration. If you get a move above key levels and key strikes, it's almost instantaneous hedging that has to be done by the market makers, and that's why you can get a really strong end of the week on some of these huge option expiration, guys. So there is that. That is pretty much it for this video. I do want to talk about Fed Jerome Powell actually getting COVID, though. I think that is key for the markets. Obviously, I hope all does go well, and we are expecting the next Fed meeting coming on February 1st, and the markets are now firmly pricing in a 25 basis point rate hike with let's go ahead and actually refresh this, with a 70.3% probability, guys. So there is that. Let's go ahead and read what they have to say about Fed Jerome Powell. It says, Powell is 69, is experiencing mild symptoms, according to the announcement. Quote, Chair Powell is up to date with COVID-19 vaccines and boosters following Centers for Disease Control and Prevention guidance. He is working remotely while isolating at home, a news report said. That is basically it. We don't have any new announcements, but this did correlate with the markets falling quite dramatically. If a Fed meeting gets delayed, it wouldn't be the first time in history, but it is a very rare occurrence, and it could freak the markets out a little bit, guys. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.